Tuesday, October 15th, 2024, Monaco 64, home of alternative economics and contrarian views. So the melt up continues. Yeah, that's the stock market melt up. And I think that is a dangerous sign. It's not a sign at all that the economy is doing well. For if the economy was doing well, why would the Federal Reserve have needed to cut rates by 50 basis points on September 18th? And why is there talk that they're going to cut again in the beginning of November? No, it's a really bad sign in my opinion. It's a sign that the everything bubble that we've had really since the early 80s is on its last legs, and everything bubbles or bubbles of financialization and debt always end in currency collapse. And you might be asking, what are you talking about? Well, let's refer to Ludwig von Mises from the Austrian School of Economics. And of course, very few people look at the Austrian School of Economics. Most people have been Keynesians for 50 years or more. Well, the whole system has been. The central banks, the economists, they're all PhD economists that have been trained as Keynesians. And what does that mean? Well, the Keynesians believe that central banks, governments, they have to manage the economy. They have to look at all the statistics. They have to, when there's a recession, they need to interfere or intervene through artificial monetary policy and government spending or fiscal policy. And that's why we are at the end of this everything bubble. They've taken the cycles and pushed it even further. Yes, bond yields topped in the early 80s, but they've abused the cycles through artificial money printing or fiat currency. And I think we're just in the beginning of the unwinding of that. So let's refer to what Ludwig von Mises calls the Crackup Boom. And I've been talking about this for quite a few years, and it might sound repetitive, but it's really important that we keep this in mind, because I think we're getting closer and closer to it. So this is what he says. But then finally the masses wake up. They become suddenly aware of the fact that inflation is a deliberate policy and will go on endlessly. A breakdown occurs. The Crackup Boom appears. Everybody is anxious to swap his money against real goods, no matter whether he needs them or not, no matter how much money he has to pay for them. Within a very short time, within a few weeks or even days, the things which were used as money are no longer used as media of exchange. They become scrap paper, or as I put here in brackets, scrap digital entries. Nobody wants to give anything away against them. It was this that happened with the continental currency in America in 1781, with the French mandats territoriaux in 1796, and with the German mark in 1923. It will happen again when the same conditions appear. If a thing has to be used as a medium of exchange, public opinion must not believe that the quantity of this thing will increase beyond all bounds. Inflation is a policy that cannot last. So there you go. This is from Human Action. Yes, I would say it's Ludwig von Mises' magnus opus. It's a very academic book. You might want to look at it online as a free PDF, or you might want to buy it. I recommend the Mises.org website for that. And it's on page 428. So is the stock market which is a financial asset when you buy a stock, really. Is that a real thing? Well, a lot of the companies in the stock market, they represent ownership in real things. So it's not surprising, in my opinion, that the stock market is melting up. And if you look at third world countries that have had hyperinflation or currency collapse or the Crackup Boom, like Brazil, Venezuela, Argentina, Zimbabwe, and many others, their stock markets went through the roof. And the economy wasn't doing well. The majority of the people, the middle class, the working class, they were suffering. They're struggling with their everyday bills, with the basic necessities. Of course, the people at the top were laughing all the way to the fiat currency bank, and hopefully they were exchanging their fiat currency for real wealth, I would say, and I'm sure they did, but a lot of them didn't. So that's what I think is happening here. And of course, we always have to go back to gold and silver eventually as well. I think silver is going to catch up, but gold is the ultimate measure of value. And if you look at the Dow Gold ratio, you can see that we're nowhere near where the Dow Gold ratio was at the beginning of this century or the end of the last century, around 1999, 2000. We got up to about above 40, which meant that you needed 40 ounces of gold to buy one Dow, and now it's down to around 16. And I think that's how the currency collapse will occur, the Crackup Boom will occur. Yes, the stock market and maybe even the bond market will look like they're doing really well, but versus gold, they're going to underperform. And that's why you need to keep an eye on these ratios, like the Dow Gold ratio, even the 10-year note or the T-bond to gold ratio. That is very, while I look at it the other way around, you do the gold price divided by the T-note or the T-bond, and you look at it, it looks almost like the gold price as well. So all these financial assets are losing value versus real money, i.e. gold. And what's the solution to this? Well, there is no solution. There will come a point where the dollar, the current dollar that we have, the fiat dollar or the Federal Reserve note, if you want to call it, the Bank of England note, the fiat pound or the fiat euro, they will become like not fit for purpose, and something will have to occur. Some people think they might bring in a CBDC. I don't think a CBDC will work. And what will work, in my opinion, well, the only thing that will work is decentralization. And what does that mean? Well, that means we need to get rid of central banks, and we need to get rid of legal tender laws. And I'm going to talk about what that means in another video. But what that would mean is that individuals would compete in a free market. And the free market would decide what money and in what way banks would operate. We wouldn't have to be dependent on the Fed every 6 weeks at their meeting. It's just ridiculous. And we wouldn't have to be dependent on the government to bring out a budget and to be worried whether they're going to take our wealth or they're going to tax us more, which is what's happening here in the UK. What about politicians like Liz Truss, who came a couple of years ago and she said, "Oh, I'm going to grow the economy." Well, this is the old cop-out, really, and they're doing the same thing now, the new government in the UK, and candidate Trump is doing the same thing. He said he's going to cut inflation, grow the economy, and the same thing goes for all politicians of all all different colors. None of them really will tell you the truth of what's happening, that we are in a financialization or an everything bubble, and that what we really need is a complete wipeout of the system. There was one politician who warned against this and gave a solution, but his movement was hijacked, and that's Ron Paul and the Tea Party movement. He said that we needed to tighten our belts. Government did. Government needed to get smaller, spend less, that we needed to end the Fed and bring back sound money and legal tender laws. And how would he cope with the unfunded liabilities, though? Because there are millions of people dependent on the government for these payouts, Social Security or Medicare, or in the UK, the state pension. Well, he always said that you'd do that gradually. You couldn't just rip that off from people. It would be too extreme, but you'd have to do it gradually, and then future generations would have to get used to looking after themselves. But unfortunately, we haven't done that. And the socialists and even President Trump has said that he's promised to keep paying the unfunded liabilities, and he's said nothing about the national debt, the deficit spending. If anything, he's promised to cut 7 trillion equivalent in taxes. Yes, cutting taxes is great, but what about the size of government? That's what matters. So this is how I see things right now. It's a Crackup Boom. Some people think, and there are good reasons to think about it, that we could see a stock market crash. Only because if you look back in the last 30, 40 years, every time the Fed starts a rate cutting cycle, the stock market has corrected, especially from 07 to 08, 09. But I would say that things are not always the same, and that in a currency Crackup Boom or hyperinflation, if you want to call it, we might not get a big crash. We might get a big correction, but the central bank and the governments would intervene right away. They wouldn't let it happen. And this is what I think is happening now. It's crazy that we find it necessary, or the markets find it necessary, that the Fed needs to cut rates while the stock market is booming. And of course we know why, because there's problem underneath the financial system. And it all goes back to the debt. And it shows that we are near the end, I think, because they're not going to allow any correction in the amount of debt. And by that I mean they're not going to let debt be paid off or destroyed through bankruptcy, even though there is some of that happening, because they'll lose their power, the bankers and the politicians. And talking about bankers and politicians, I saw yesterday that the UK government held an international investment conference, and guess who they had there? Who Keir Starmer and Rachel Reeves were hobnobbing with? Well, they had people like the CEO of BlackRock, like Larry Fink, and the CEO of Goldman Sachs, David Solomon. So we're still in the grips of financialization, and the politicians have no clue. They want to keep this system going, and they're going to help, of course, the big corporations, the big financial corporations who are running everything now, and not the small business out there. They're talking about here in the UK of cracking down on too much regulation, but you can bet it's not going to help small businesses. And you need small business to flourish in an economy. That's what creates the jobs. That's what created the Wirtschaftswunder, the German economic miracle. Was the Mittelstand, the small mom and pop businesses in Germany. That created the economic miracle, not Goldman Sachs and BlackRock. They're just gonna rip off the taxpayer again with the help of Keir Starmer and his government. And the same thing was happening, of course, under the previous government. Same thing is going to happen in the US. So brace yourselves, look after yourself, your family, and don't expect government to bail you out. So keep stacking, keep paying off your debt, and stop dealing with the bankers. That's the way I see it. Yes, you don't have to get things that you don't need on finance. That's the way you need to think about it. That's the way I see it. So Rudy and I are a little earlier today. It's 7:20 a.m. London time. So let's have a quick look at the markets. We've got spot gold at 26.43. It's down about $6. High's been 53, low 38. Silver's trading around 31. It's down 20 cents. High's been 31.33, low 30.74. So yesterday the low was 30.71. Yes, gold and silver are kind of struggling here, but I don't expect that to be very lived, or it will be short-lived. The Dow futures up 36. The NASDAQ is down 13. S&P is up a point. In terms of the currencies, the dollar is a little stronger versus the pound and the euro. Not much to write home about. Dollar is still relatively strong versus the yen ever since the Japanese backtracked on raising rates. The dollar's gone up. We're just below 150. And we're continuing to see a big drop here in crude oil. WTI is down almost 4% at 70.57, and Brent as well is at 74.34. So what about the bond markets? Well, the 2-year yield, that's up 3 basis points at 3.97, and the 10-year is down about 3 basis points at 4.09. So with that, I'm going to wish you all a very good day. Take care. Bye.